All right, welcome to YWR. We have a special guest today, our favorite gold mining CEO, Jeremy Gray. Jeremy, the YWR community is very interested to get your updated views. You were last on in September last year, and when gold was at $2,500 an ounce, you were boldly predicting that people were underestimating where this trend was going to go, and that gold could be at $3,500 an ounce by March of 2025. And you said this could even go further to $4,500 an ounce by September 2025 or more towards the end of the year. And so this was at a time when no one thought gold could even go to $3,000 an ounce. And so you've been right on the money about this trend and the strength of it. And we all want to hear, what you're thinking now and if this trend still has legs and further to go.
Oh yeah, Eric, thanks so much for having us. We've got much further to go. Gold's going to have a phenomenal year. It'll be the best performing asset class this year by a country mile. The gold miners will probably double from here, and I see 4,500 by year end, probably 3,200 by the end of this month. Okay, we all know the normal fundamentals. The central banks are buying. China's now buys 100% of global mine supply of gold a year. India is still extremely strong. But the Americans are back in the market for the first time in 40 years. The retail are back in America and in Europe. But also, more importantly, I think the bigger story here is that the LBMA and the COMEX are short, are really caught short. The bullion banks are short some 400 million ounces of gold, which is equivalent to 5 years of global mine supply. I imagine some of those big banks are having some pretty serious conversations right now. Everyone's standing for delivery at the LBMA and COMEX, and 40 years of price manipulation probably might just be coming to an end. And that, I think, is the main driver for this price just pushing higher and higher. And the shorts can't.
What are they saying, Jeremy, at the LBMA? Like, what do they say, 4 to 6 weeks now if you want to get delivery or something like that?
Yeah, and I'm sure on the 8th week, they'll give you a call and say it's another 4 to 8 weeks or whatever. So,
Right.
That's a pretty scary thing when you go to a bank and they say, well, come back in 4 weeks to get your cash. That's a worry. And I heard that some statistic that 137 different investors own the ETF that you might own or the GOD or the SLV. So there's enormous amount of paper out there and very little physical supply. And why is there no physical supply? Basically, the industry in gold mining has been devoid of capital for decades, and we really must thank the LBMA, the COMEX, the bullion banks for keeping the price low, because it's allowed little guys like us to go and buy beautiful mines like Tucano, Liva, and Pilar at cents in the dollar. And otherwise, the price today will be much higher.
Yeah, Jeremy, and I just want to say, backing the other, kind of supporting evidence is when I look at ETF flows in the U.S., the World Gold Council shows this data. You haven't seen February. You saw the first strong month for retail gold inflows into the GLD, but you haven't seen those for 4 years. And I think it's interesting that gold. The last time there were big inflows into gold was 2020 when gold went to $2,000 an ounce, and there was a bit of energy there. But subsequently, you've had over 4 years of retail selling, biggest savings pool in the world, selling gold, selling the GLD, and meanwhile gold goes up 50%. And now I look at the setup and I go, wow, NASDAQ's going down, S&P's going down, Bitcoin's going down. Trump is talking, looking for a weak dollar, whether that happens or not. But you've got a lot of the main asset classes people are used to owning in decline. And now gold as this one thing going up and making new highs. And February was the first month that people even starting to buy it. And meanwhile, you're getting this coincidental shortages and delivery problems out of the LBMA. And you were saying that Indians are getting interested, Chinese are interested, now American retail might be getting interested. There's a lot of forces where this could start to really accelerate from here.
Yeah, absolutely. I mean, it took what did it take? 9 months to go from 2,000 to 3,000. It took 12 years to go from 1,000 to 2,000. So why can't it take 5 months to go from 3,000 to 4 or 5,000. So I want to thank a special thanks to all the crypto promoters out there who've basically diverted trillions of money out of the gold industry when money should have gone into gold mining. And I want to thank Michael Saylor for diverting trillions also away from us. And that's creating a major supply squeeze. There's virtually no new mines coming on stream in the industry. Liva Gold, Tucana Gold are probably the only two new restarts in the industry. We're starting those next quarter. But there have been, there's been no money in the space, right? We all know that. There's been no interest. It's been just a nuclear winter in gold mining for at least 12 years. And even if money suddenly floods in tomorrow, which it's not, it will take 3 years or 4 years to build a gold mine. So
yeah, and Jeremy, during that nuclear winter, you were acquiring gold mines, and I think it's one of the great lessons of contrarian investing, and you are the master of it. And I think people got to take notes for. Like, you were looking at gold mines when, COVID in Brazil, the one in Finland, when power prices were quite high. Like, I think you were showing me there were $1,000 a month power bills, and that was really turning off investors. Power prices have subsequently come down and the gold prices come up, and it's an amazing jurisdiction in Finland with an already completed mill. So that has turned out. But I think what I wanted to say was that was the peak nuclear winter, was when you were buying them. 6 months ago, you were saying when gold was at $2,500 an ounce, you were saying still not much interest, which is kind of surprising. But I think now you're saying the temperature is, there's starting to be some inbound activity. I mean, there were retail was interesting, was helping and was investing throughout this period, but the institutional capital is now starting to wake up, I think, and at least there's a bit of inbound activity and actually some due diligence and potentially deals, right? What's the update from?
Look, 12 years of bear markets trains everyone not to believe these moves and to think the rug will be pulled out at you at any moment, and we'll wake up tomorrow morning and the price will be back at 1,600. We're all trained to think that way. And when you buy these mines when the market's so bad, it's a very lonely experience. And it's only thanks to the amazing support of our nearly 700 small mum and dad retail investors, sophisticated investors who've helped us find that money when we needed it. But no, it's still very quiet. It's still very quiet. You'd think at 3,000 gold, we would be flavor of the month. But nothing like the previous two peaks in 2000, and also that peak from 2003 all the way up to 2011. Nothing like that, which tells me we're going much, much higher, much, much higher. It's really exciting. Like, it's just amazing that I find it amazing that it's not like the most talked about sector in the whole industry.
No, Jeremy, and I can confirm that just from the chat with YWR subscribers is one data point, but also chatting with other chat groups. There is zero mention of gold. It is still 95% AI and technology, a little bit of Bitcoin talk, but nobody is talking about gold mining.
No, it's fantastic. I love that, and long may it continue, because everyone will then, when the end of the year. I mean, I'll give an example. I've got my entire pension in the Ruffer Gold Fund in London, Paul Kennedy. 100% of my entire pension, my future's retirement, is in there. My advisor has been ringing me for months saying, "What are you doing? You're crazy. You have to diversify." And I said to Gurdov, I said, "How many of your about 150 clients have got any money in this gold fund, or any gold fund like BlackRock or Jupiter?" He said, "Well, none. You're the only one." And I thought, wow, that's amazing. That's amazing. And I bet you it's already up 35% year to date, probably. And it'll be up 100% this year. Meanwhile, NASDAQ's down, 10 or 8? And I'm sure it's going to be down 30 for the year.
Your financial advisor with 150 clients says you're the only person he knows with a gold fund.
I was totally shocked by that. I thought there must be at least 10 of us who are silly enough to do that. The other thing is, like the old, the gold bug, when they call you the gold bug, it's just a way of demonizing you and making you like you're some bearded old guy with jam in his beard, like it's, this is all about trying to just write the whole industry off. why was it that Gordon Brown sold all of England's gold, Britain's gold, at $250 an ounce? Like, why aren't they talking about that now? And it's now nearly 12 times more than that.
Oh,
Could you imagine? 300 tons they sold at $250 an ounce. No one talks about that. So now you've got every central bank just clamoring for gold. You have, just incredible demand for physical, incredible demand.
but there is starting to also be interest in Tucano and Liva. Is that correct?
Touch wood, Eric. Tucano Gold tomorrow will sign the completion of a $98 million all-equity private equity transaction with probably the most successful Brazilian private equity group. We'll name that next week. So that's totally new to us. We've been 6 years on this journey by ourselves with wonderful support of wonderful, retail support shareholders. So 98 million will turn Tucano into a 200,000 ounce producer. The pre-money valuation on that's only 36 million Canadian, and now we are fully funded. But yeah, that thing could be a 2 billion valuation quite easily.
$36 million pre-money.
Canadian. Yeah, to build it today would be
Canadian.
To build it today would be 500 to 600 US. It even comes with its own airport. Has a 200-man state-of-the-art camp. We bought it for $4 million. And
Liva is similar. It's a whole built-out mill and a mine and permitted, and someone just gave the keys, right?
Liva is the biggest gold mill in Europe. I thought, well, that's surely going to attract some interest, but I've been running around for 2.5 years begging for money. No one would give it to us. It's like last time it did a gold pour was 1,200 euros an ounce. Today it's 2,800 euros an ounce. It will clock probably 9 million euros a month. And we're doing this at a pre-money valuation of 40 million Canadian. And finally, we found a group that wants to back us, John Williamson and his team. They're the ones who put in 15 million in. Finally, after 2.5 years, God, I must be the worst salesman there is. We're going to turn her on this summer. Like, it's a beautiful business. You must come up there.
But Jeremy, this is, I definitely want to, but I do want to go in up there when it's warmer. And it is interesting. You have the complete opposites, right? You have the Amazon rainforest and the Arctic Circle. But just like you said, when things are good, you said, back in the day, you could go around Mayfair with a PowerPoint presentation of some land in the DRC and, potential.
Yeah.
Nothing drilled, or maybe some drills, probably some drilling. But these are actually formerly operating gold mines with the infrastructure, the mill, the pit, and the whole thing. I mean, it's much further along. It's not a greenfield at all.
Yeah.
And yet investors are still very tentative, even to,
I find
it's a sign. It tells you.
These are all mines. Pilar, Liva, Tucano are all built by majors. Their infrastructure world class. But yeah, look, it's just that's the state of the market. We're used to that. I think the other thing that's interesting is a lot of these smaller producers are trading on PEs of 1. Right now, today's gold price, they're very interesting. We've been approached by 4 different groups on one of our companies, Pilar Gold, to merge just in the last few weeks. Things are definitely changing. And the one thing we talked about India, right? I mean, India, the wealth effect for the Indian consumer, and I think this is really interesting. You think, what did you say? You said the World Gold Council think Indians have 20,000 tons hidden under their bed.
Yes. That's their estimate.
Now, I think you can add a 0 to that and still be conservative. So that's 200,000 tons of gold is somewhere floating around India under someone's bed or on jewelry. And what did we work out? If you do a 50% price increase from here, that's a 20 trillion net.
No, we worked out that the World Gold Council estimates $2 trillion in the Indian households, but you think it's off by a factor of 10. Yep. So at the current price, that's $20 trillion of gold held by Indian households. And then we were saying, what happens if gold goes up another 50% to $4,500?
That's 10 trillion.
Adds, another $10 trillion to the wealth of Indian families, and just, what happens?
Yeah, like if you're in the Sensex right now, you must be thinking, I'm going to switch out of that and keep buying more gold. What the Indians are doing now is buying silver. And because, when it gets a bit pricey, they tend to switch over to the silver market and then realize a month later, well, I just better back up the truck and buy it at 3,500 gold anyway. So that's a massive wealth influence, I think, on the Indian economy over the next couple of years. Whereas the
Yeah.
average American owns no gold, yeah? The average
No, they're
Australian,
long the S&P. That's what they
yeah,
are.
they own the S&P. Australia, the Canadian central bank sold all its gold. The Australian central bank, I think, has nothing. The English, the British bank sold everything. So there could be, if we see a dramatic move in gold up to 10,000, you're going to see a real change in wealth effect in certain countries. The Chinese have suddenly worked out that gold is a hot thing. They used to buy handbags at LV and Hermes. Now they're buying gold. They're not interested in handbags. They're no longer buying Romani de Conti wines. They don't care about that rubbish, or watches from Switzerland. They want gold. They want gold, and that's the real status symbol now. You know, when you're a rich guy, they won't go, how many billion are you worth? They're saying, how many tons do you got? You know, that's going to be the new status symbol. How many tons of gold? A ton of gold goes for 90 million. So you can go, yeah, I own 10 tons at your next dinner party, you know. Like, you know, that's where it's all heading. And
That's the new flex, yeah.
you know, if you think about it, Eric, with all this terrible pricing that I think the price has been artificially kept low for 40 years. How much money has our industry not received because of that? We've been artificially selling gold at a massive discount. And that's all coming home to roost now. No one's built gold mines. There's very little supply. The numbers are just crazy, right? And compared to every other commodity, the fundamentals for gold and silver are 2 to 3 times better than anything else. Don't talk to me about copper. It's boring compared to gold. You won't see the price moves in any other commodity like you're about to see in gold and silver.
And Jeremy, just one thing you've said before is you think that the next trend in the mining industry will be that the big mining companies like BHP and Rio will decide they want to own gold mines.
It's kind of mad that BHP and Rio have not already bought Barrick and Newmont. Like, I just find that staggering. Like, I don't remember the last time BHP had an Australian as a CEO was like 1990. I'm actually going to apply. I'm going to send my CV in and say I can do a better job than this fella. Some wokey guy, you know, good looking. You know, the obvious trade for BHP is buy Newmont, and for Rio to buy Barrick. So suddenly their portfolio becomes so much more interesting and much more dynamic, because let's be honest, iron ore, copper, coal, they're all kind of sideways to down. They're not going to give you the 50, 100% moves that you're getting now in gold and silver. So yeah, massive M&A coming. All the junior space will get, I think, consolidated. Huge re-ratings on valuations. The one thing I would keep clear of are the explorers. I think unless you're going to produce in the next 3 years, they will definitely underperform the producers. Yeah.
Okay. Well, Jeremy, that's a good update. I think we covered a lot of stuff. The trend is still intact and actually might be about to even accelerate from here. And your mines are doing well, and I think you're still like you are raising money for Liva and Tucano.
Yeah, we're just about to close both of those rounds at 3 cents in the dollar of replacement value. So by all means, go on to tucanogold.com or livagold.com. We're always happy to give you a shout. As I said, we've got nearly 700 mums and dads who've supported us through the tough times. These last 6 years has been incredibly tough to do this and to build a portfolio of mines where everyone's chasing something else. So really appreciate all their support. Some of them might watch this video, and I just want to say thank you so much. And we're going to have a fantastic year for Pilar. Pilar Gold's been out of the spotlight for a while now, but I'm really excited about Pilar as well.
Jeremy, thank you very much for giving us the update, and we always love hearing what you think.
Thanks so much, Eric. Really appreciate it, mate. Cheers.
Thank you.